Welcome to Master Trader's Chart of the Week. This is Dan Gibby, and in this session I'm going to show you one of our very high probability setups called the Bullish 1-2-3 continuation, how we use the overall Master Trader strategies to find the best setups. Typically I'd like to do trade reviews, but in this session I'm going to show you some setups that we actually found for our subscribers this week, so they are actionable this week. All of these are what we call Master Trader bullish money patterns. They work on all time frames, all instruments, stocks, commodities, currencies, futures. It doesn't matter what you trade, they all work the same. Then we take these little pictures and we overlay the other concepts that make up our approach, which include the trend, support and resistance. What do multiple time frames look like? Are they in alignment? Is it showing relative strength or weakness to the sector and the broader markets? What are the broader markets doing? And then we just simply calculate position size, enter, and manage in between using our same technical approach. During the weekends, in addition to during the day, we use a TC2000 as our scanning tool, and we are never void of finding compelling trade ideas. On the weekend and every single day, one of my favorite ones is the bullish and bearish 1-2-3 continuation. These are a couple scans over here, wide range bars, 180, bottoming tail, etc. But today I'm going to focus on this. This is just wide range bar. So you'll see in a minute how this is the start of a possible compelling pattern. I have this one clicked here, plus 1-2-3, which is today's session. It's the bullish 1-2-3 continuation. Obviously all of our patterns apply on the bullish or bearish side, and these are bearish 1-2-3s. Based upon the market strength last week, last Thursday and Friday, where we had the wide range bar, we have many candidates for bullish 1-2-3 continuations. So let's begin. I'm going to review a couple of these that are in our recommendations to subscribers in our advisory letters, and the ones that are also I'm going to keep on my watch list for possible further development. GRBK here. We use the 20, the blue line, the green is the 50, the red is the 200 on all of our daily charts. You can see simple red and green candlesticks, color-coded volume, and these three MAs. That's it. We make all our decisions off this. No oscillators, fib lines, nonsense. So this was in a downtrend, short, medium, long. This was the first sign of something changing, a greater than 100% retracement all the way back down to the prior low, which is not atypical of bottoming patterns. And then here we go again, 100% retracement. This occurred in 2 bars. That is strength. 2 bars back to the prior high with an inside bar. A 1-2-3 continuation is a very simple setup, like I showed you here. It's a wide range bar with an inside bar that stays in the upper third of this bar's range. You buy over the high of the 2 bars. But with every pattern we teach, there's different levels of confidence. You do not take every one. You take the ones that are high probability, which I'm showing you right now. So this is very, very high probability. Bottoming pattern, bottoming tail here on major support. 2 little other bars made higher lows, so it's not going down anymore. Does that mean I would buy it here? Not necessarily. This is a different trade now. So I have a closing breakout here, but it's extended. Now I have an inside resting day. Let me show you now the inside chart, the 15-minute chart, which is why these are such high probability patterns. So here was the gap up last Thursday. This is what we call a bullish end of day base. It went sideways all day in the upper third. That is strength. The power of the gap. Look, there's no tail there. It didn't retrace. The day started with a wide range bar. Buyers right on this day last Thursday just came out in full force buying. That's strength. Next day, pulled in a little bit as the broader market did, but notice this entire day still held the upper third of the wide range bar on the daily chart. That is extremely bullish. And what I have here in the title is a 1, 2, 3 continuation with these two bars, a one daily chart, 15 minutes, 6.5 hours a day. You can do the math, but that's 26 bullish bars per day. And that's what's creating the bullish intraday consolidation. So on a breakout, this is major support on this smaller time frame. Once the stock gets altitude, then the initial stop we always put under the wide range bar. Once it gets altitude, which is what I say, it triggered and it's performing as performed as predicted, then we move the stop under a prior bar's low. Another one here, Toll Brothers, the housing sector really exploded with the better favorable CPI number that came out on Thursday. So interest rates coming down, the US dollar coming down, that helped interest rate sensitive stocks like housing. So this is what we call a pro gap over resistance. Wide range bar, yeah, there's a tail, that's fine. We just want a wide range bar with little to no tails. I have an inside bar. If you go look at a 15-minute chart, you'll see a similar bullish continuation, consolidation. We buy over the high, stop under the low, manage in between. Another one here, UMH. Again, you can see the 20 and 50 diverging here. It wasn't a downtrend. Now notice this, I have this marked. This was a breakdown. This was a little sell setup. That should have gone down more, but it closed with a long-legged doji. And does that mean I do anything with that? No, not at all. That's not a pattern. But then the next bar, wide range igniting, engulfing, closing breakout. Now that makes this bottoming tail a plus. It's a little downside shakeout. Now I have my inside bar, I have a price void, which means look to the left, there's insignificant resistance. Took a little snapshot here for you for the 15-minute chart again. So this is the igniting bar on Thursday. It didn't, different. Obviously they're gonna set up differently. But nevertheless, the important thing is you want them to stay in the upper third of the power bar, and this one did. The entry is over the highs, stop under the low, manage in between. Shoe Carnival here. So what got this is a mess. I mean, I typically just have no interest in charts that have overlapping bars, indecision. We might sell credit spreads on them, saying it's a mess, but I'll just sell a put spread under here, call spread over here, whatever the case. But this is what got our attention. And we actually found all these on Thursday with just the simple wide range bar scan. Now it's thrown into the 1, 2, 3 scan because, as you've just learned, it's an inside bar in the upper part of a wide range bar. But what makes this a high probability setup is this 180 reversal here. That was an ugly red bar. Yes, it's on support, but that suggested lower prices. The very next day, 90% gap into that wide range bar, and then a closing breakout. And now I have an inside bar. And this one closed red, which is actually ideal because then it's a red bar ignored. I got two little topping tails. So the entry over these highs ensures that it's only going to trigger if the strength suggested by this pattern right now is going to follow through. So we actually found this one, MNTV, as a breakout trade. This was a bullish gap, and it's an excessive gap, if you will. A big old W bottom here, so that was a nice W bottom. That's another one of our patterns that you saw on one of the earlier slides. But that's an excessive short-term gap, but still strong. So you let it set up, you watch it. This was a little closing breakout, another closing breakout. But what I'm showing you here now, one of our concepts, as I also mentioned, are multiple time frames in alignment in the direction of the trade that you have. So we're still trading the daily, which is a wide range breakout. But look at my weekly here. This was in a nasty downtrend. This was actually a bearish 1, 2, 3 continuation, which is just the opposite. Wide range bar, inside bar, one or, you could have one or multiple inside bars. And if you have multiple inside bars that trade, in this case, above a prior high, or in this case over here, below a prior low, we call that a 1, 2, 3, 4. So this one triggered. It triggered lower in a nasty downtrend, and look what happened. Wide range bar engulfing, closed above, you can count them here, 8 or 9 bars, whatever, on increasing committed volume. Then I have a 1, 2, 3. Now I have a 1, 2, 3, 4. Now I have another closing breakout on the weekly chart with a price void. This looks like it could go to 10, 11 bucks. I don't know, but it's supporting the wide range breakout on the daily. SSRM, a little gold or silver stock rather. So we got major support here, another multi-month bottoming pattern. But what I marked off here was this is bullish price action on major support. This was a closing new low. This gapped up. This is what we called a bullish island reversal. It leaves gaps on the left and the right, and it's slopping around. So it's slopping. Remember, at the low of this bar right here, this was an ugly red bar. And look, right at the prior low. And it closed green with a range expansion bar. This is bullish price action. It doesn't mean I'm willing to buy it. Now I have a gap breakout, closing breakout, and an inside bar in the upper third. That's my bullish 1, 2, 3. Now the reason I don't want to buy this one right now is it's at a prior high. And the metals move opposite to the dollar, and the dollar's actually getting oversold right now, and so you got to keep an eye on that when you're trading gold and silver stocks. But it's on my long watch list. This is a 1, 2, 3 from a beautiful multi-month bottom. Here's my 1, 2, 3 that was in the list above that I grabbed a screenshot. So yes, this is a 1, 2, 3. But we have a rule that says don't ever buy 1, 2, 3s far from the 20-period moving average. End of story. Here's another multi-week bottoming pattern. 20 MA curling up, bullish bar here. Now this is technically not a 1, 2, 3. Why? Because it's not an inside bar in the upper third. And really, I'd like a wider range bar, but it doesn't matter what you call it. Even though that's not a 1, 2, 3, once you understand master trader strategies, concepts, how to objectively read price action, Greg's course does that, swing trading strategies. This is 100% bullish right here. The gap over the red bar, we would be looking to buy on a pullback that day based on this little close, top of the range, adding over the high. Here's my price void, which means look to the left, insignificant resistance. This is not the time to be buying a 1, 2, 3 after a move from $54 to $66 at resistance. Last one here. So here's my, I only have 2 bear 1, 2, 3s right here in my weekend scan. Why? Well, because the market's been strong the last 2 days, so I don't expect to get many of these. But if I did, I would trade them because they are showing tremendous relative weakness. Now, is this a bear 1, 2, 3 the way we define it? Absolutely yes. But you also have to use common sense as well as understanding the other concepts that we teach. This is an excessive wide range bar, falling from 8 and change down, 11 and change to 8 and change, fell 30%. Here's my inside bar, but it fell too much. There's no price void. It's great. Here's another concept. It fell greater than 100% retracement. This is more just a slop around and do nothing. It looks like a short-term bottom because it fell so much. Hope that helped. Come check us out. This is our Master Trader Green Trading Room. My partner Greg Capper and I start in there every market day at 9 a.m. He does amazing market review, market internals, levels on selling 0 DTE SPX for option traders. I look at gappers, open trades, my hit list for day trading, swing trading, we're scanning all day, like using TC2000, answering questions. It's a fantastic educational and trading venue. And as we say here, you're watching us walk the talk, if you will. We're doing it in real time, just like many times I do trade reviews on a trade that's already closed. Today's session, I hope you're learning this setup. These are all viable setups for this week, so it's the knowledge moving forward. As always, email Greg or me with any questions. Good trading. Look forward to seeing you in the next Master Trader chart of the week.